Well, good morning, good afternoon, good evening to you, wherever you are in the world. Welcome to this launch webinar for Ember's inaugural China Energy Transition Review. My name's Richard Black, I'm the Head of Policy and Strategy at Ember, and it's my pleasure to chair this launch webinar. So the report came out today. Some of you may well have seen it on the Ember website or read some coverage about it. We're going to be outlining the main findings from it with our analysts who've worked on it. We're going to be discussing the implications with a panel of experts, most of whom you can see before you on the screen. And then at the end of the session, we're going to have hopefully about half an hour or so to take your questions and your comments and give what perspectives we can on that. So one question you may be asking is, why China? Why did we concentrate on China for this energy transition review? And really, it's mainly because China is at the heart of the global energy transition. Pretty much whatever you look at, whether it's deployment, whether it's manufacturing, whether you look at investment, it's China that's driving the way. And so if you are looking first to any other country to see what's happening in the global energy transition, then you're really looking in the wrong place. So that's why we concentrated on China. We wanted to do three things mainly with this report. First of all, we wanted to look at what's actually happening. So we wanted to get as many key statistics as we could in one place to really show where we are, where we're going, what the future holds. The second thing we wanted to look at is the why. What is it that's led China, its government, its businesses and so on to be making this profound switch to clean energy? Because if we understand the whys, then we can start to answer the very important question of whether China is in this for the long haul or whether we may actually see some kind of slowdown. And the third thing we wanted to look at was the implications for the rest of the world. China is now the world's biggest economy. If you look at things on a purchasing power parity basis, it's as a massive exporter of clean energy goods with diplomacy, including on clean energy that expands across the global south. You know, if we just focused on China, we wouldn't be telling possibly the most interesting half of the story. So that is what we're going to lay before you before we come to the discussion with our experts. So you're going to be hearing from three Ember analysts. In a moment, I'm going to hand over to Ewan Graham, who did a lot of the data gathering, and Ewan's going to talk to you about what source of data we used and so on and so forth. Then we're going to hear from Biqing Yang and from Sam Butler-Sloss, who conducted a lot of the actual analysis and writing on the report. So without any further ado, let me hand over to Ewan.
Thank you, Richard. Let me quickly introduce myself whilst Biqing pulls up the slides. My name is Ewan Graham, and I'm an analyst within the data team at Ember. And as Richard said, I worked on the data and methods for this report. So the aim with this report really, just over on the next slide, is to take all of the complex data and information that exists out there on China's transition and really distill it into clear and actionable insights for our readers. So to do this, we combined some of the different strengths that exist within Ember. First and foremost, we took data from a wide range of sources. So that includes national and industry data sets within China across the energy system, including the National Bureau of Statistics and the China Electricity Council, alongside international data from the likes of the IEA, IRENA, as well as our own internal data sets. And we've done the work to harmonize and make sense of all these data in the round. But then we've also made use of Ember's deep connections within China to inform and contextualize the analysis done within the broader picture. And with these resources, combining sort of China knowledge with data expertise, we're able to unpack some of the key issues that we see around China's energy transition and produce actionable insights. And this really fits with Ember's mission more broadly to accelerate the transition to a clean, electrified future. And so we aim to create targeted data and policy insights by gathering, curating and analyzing data and as the data team within Ember, we also aim to open up data for other organizations to analyze themselves and make it more accessible. So just quickly to highlight to that end that we maintain a whole range of different data sets in different geographies across the energy system. So a few highlights here include our electricity data explorer, which allows you to view generation data along with a whole host of other metrics for almost every single country in the world. We have a data tool that tracks China's exports of solar panels alongside a whole bunch of other regional data tools such as our EU electricity prices and costs. But excitingly, we have two new tools on the horizon related to China, including a expanded tool looking at clean technology exports to different countries, as well as a tool that enables analysis of provincial generation data. So there are lots more on this, and please go to our website and look for yourself at ember-energy.org/data. I'll pass back to my colleague Bi-Ching, who will talk through the main findings of this report.
Thank you, Yuan. My name is Bi-Ching Yang. I am an energy analyst at Ember, and I work primarily on China. As Richard mentioned at the beginning of the session, when we were scoping this report earlier this year, China was facing uncertainties, both from trade tensions as well as from its domestic tasks of rebalancing its economy. Therefore, we hope to answer the question that, given these shorter-term urgencies, is China's clean energy transition still forging ahead? In this report, and hence this presentation, we structured it in 3 parts. So I will take you through the first 2 chapters, which covers the current trends of China's clean energy transition, as well as more qualitatively, the internal drivers of this transition. And then I'll pass it on to my colleague Sam Butler-Sloss to cover the global implications. So the first part of our research is based on the analysis of data. We analyze the facts and numbers and trying to picture the scale as well as the speed of the transition. So let's start with the supply side. For much of the past decade, China's transition in the supply side has been marked by the record addition of wind and solar installed capacity. From our research, we're seeing increasingly efforts are directed towards the wider system around clean energy, so market mechanisms, infrastructure, as well as flexibility support. A system that is able to integrate, to balance, and sustain larger scale deployment of clean electricity. This chart represents the current state of wind and solar deployment in China. So the green parts represent the proportion of electricity generated by wind and solar in 2024. At the national level, wind and solar now supply around 18% of China's electricity. And if we zoom in at provincial level, a couple of provinces are leading this progress. Qinghai here generates nearly half of its electricity from wind and solar. Gansu is also at more than a third. In total, 7 provinces that are highlighted in green in this graph are at more than a quarter of wind and solar generation. And then on the other hand, this rapid and large-scale expansion of renewables also brings in challenges. China's need to enhance electricity system flexibility is getting more and more urgent. The focus of current stage of the transition is therefore increasingly shifted to building the system around this higher capacity of renewables. Therefore, alongside China's rapid expansion in renewables installation, grid investment is accelerating as well to match the increasing need. At the same time, we're seeing drastic increase in battery energy storage in the past 5 years, represented by the green columns in the graph on the right. So jumping ahead a little bit, because I think it's important to mention here as we're talking about the wider system support, you can also find the current progress of China's power market reform in Chapter 2 of our report. So moving on to the demand side, large scale of electrification is expanding in China. We're seeing clean electricity replacing fossil fuels in how energy is being used. In this slide, we can see that China's share of electricity in final energy consumption has been rapidly increasing, putting the country ahead of the US and OECD European economies in terms of electrification rate. This is driven by, other than the well-known large-scale deployment of EVs in the transport sector, we're also seeing rapid electrification in industry as well as in low-carbon heating. We're also observing progress in sectors that are less electrified at the moment, or where clean energy technologies are less commercialized at this moment. For example, as shown here, heat pumps or green hydrogen production, which is critical for heavy industry decarbonization, for example. So now let's zoom out again to look at the overall trend. China has a track record of achieving or overachieving its targets earlier. For example, the 20% EV target for 2025 was achieved 3 years ahead, and considering it was only a 5-year target. The 2030 goal of 1,200 gigawatt of wind and solar capacity was reached last year. So things move fast, and often faster than we expect. Now, let's look at some more numbers. On the left side, we compare the share of electricity demand growth in China met by different energy sources in the past couple of decades. Last year, 84% of this new electricity demand was met by clean electricity. This number is under 50% just the last decade. Furthermore, in the first half of this year, we observed that fossil fuel generation actually declined by 2%, given the strong growth in wind and solar outpaced the rising demand. Now, this is the graph from this chapter, picturing that China's fossil fuel peaking is in sight. China's direct fossil fuel use had been rising rapidly up to the year 2015, where we saw a high of 49 exajoules around that time, and has been fluctuating really around a similar level ever since, driven by, as we mentioned earlier, a rapid rate of electrification. And when we look at the source of China's electricity since then, we're also seeing a fossil peak or something similar to a plateau in the past year or so, pushed also clearly by the strong growth of wind and solar. The beginning of 2025 continues in seeing new milestones in China's clean energy sector. At the beginning of this year, China's wind and solar generation capacity surpassed its thermal power capacity for the first time. This is also backed by a massive pipeline of new wind and solar projects and continued investment in grids and battery storage. Our research did not stop here at the trends and momentums. We want a step further, and we hope to answer the why. So what are the internal drivers to China's clean energy transition? To unpack this, we conducted extensive interviews with experts earlier this year. What I'll share next is our interpretation of the key insights that came out of these conversations. You'll find more details in the chapter 2 of our report. And personally, I found these discussions hugely insightful. And today I want to highlight the key messages that we at Ember drew from them. So let's start with the why, with the key reasons. China's rapid economic growth has been powered by fossil fuel. However, this old model is reaching its limit, primarily due to the following 2 reasons. The first one is energy security. For years, over 70% of China's oil and about 40% of its natural gas depend on imports. Coal, on the other hand, is long considered the backbone of energy security, but it is also not infinite. At the current rate of consumption, China's coal reserves may only last for another 3 to 4 decades. And secondly, China's fast economic growth for the past couple of decades has come with a significant environmental cost. Air and water pollution have resulted in social discontent. At the same time, the heavy carbon emissions have damaged its international reputation and placed pressure on the government to have to take action. And meanwhile, clean energy transition is also bringing in strategic opportunities. Clean energy provides China the strategic lever to strengthen competitiveness, enhance resilience, and position itself as a leader in some of the industries of the future. As the fossil fuel model reaching its limits, the transition is seen as a pathway where growth, security, and sustainability can reinforce each other. We also looked into some of China's approaches in clean energy transition at a more strategic level. In recent years, China's energy policy has been emphasizing the concept of build before break. This approach prioritizes establishing a stable and reliable clean energy system before phasing out and abandoning the existing one. However, this build before break approach has led to some doubts that China's energy transition is energy addition rather than a real transition. And much of the discussion under this framework is actually focused on coal. But we are, in fact, observing that coal's role in China's energy system is indeed shifting from serving as a primary baseload source to increasingly as a flexibility backup to renewable generation. The other practice from China is the systemic support to clean energy technologies. This can be seen in, for example, the growth path of China's solar industry, EV industry, driven by comprehensive policy support and rapid entrepreneurial responses. Following on the point of pragmatic efforts in supporting the growth of electoral tech industry, a growing buy greening dynamic is starting to take shape in China, fostering a sort of self-reinforcing cycle for innovation and technology deployment. Importantly, increasing amount of players are involved in the clean energy industry. This brings in new momentums into the Chinese economy. The fact that clean energy is a lot more accessible compared with the fossil fuel sector allows for more investment and encourages more innovation from the private sector. In fact, private companies are leading some of the most dynamic parts of this transition. If we think about EVs, batteries, renewables, the big names that we have now in these industries are not state-owned. So as a result, China's new three, which refers to its solar, batteries, and EV industries, has expanded 3 times faster than the overall economy last year. And besides the new three, emerging technologies like green hydrogen and smart energy systems are also opening up new business opportunities, while the government is placing greater emphasis than ever on innovation and research and development. China's energy transition is reshaping the global energy landscape, but we're also aware that the implications vary across countries and contexts. This is why we hope that our research can spark continued discussion, both in today's sessions and in the future. So with that, I'm going to pass it on to my colleague Sam Butler-Sloss, who will explore what this transition means at a global scale. Over to you, Sam.
Thanks, Bicho. It's great to be here. So chapter 3 turns to how China's transition is reshaping the global energy landscape. Next. And so we focus on three major impacts. Number one, China has made electrotech cheap and big. Number two, this is enabling an emerging market energy leapfrog. Number three is China acts as a swing nation in global fossil fuel demand. So to pick up with the first, the core dynamic at the heart of the ongoing energy revolution is falling costs. Specifically, solar, batteries, electric vehicles, wind turbines. These are manufactured technologies that enjoy learning curves. That is to say, the more we make of them, then the cheaper they get, and so the more we demand them. And so if we take the example of solar modules, since 2010, solar module prices have fallen over 90%. In which period China has been responsible for 3/4 of that manufacturing, 3/4 of that learning by doing and economies of scale. And now we're at a point where Chinese solar modules cost sub 10 cents per watt, batteries sub $70 per kilowatt hour. And this is enough to profoundly change the economics of energy all around the world. Next. China's contribution to manufacturing in the past is impressive, but equally impressive is its sheer scale today. Right? And here we show global solar additions in the dotted line, and layered behind it is China's solar module manufacturing capacity. And we see at the moment, and that manufacturing capacity exceeds global demand, and it continues to, even in a rapid change IEA net zero scenario. And batteries tell a very similar story. Chinese battery manufacturing capacity today is around double global demand, and China's manufacturing capacity in batteries continues to outpace fast adoption scenarios into the near future. And the result is this is really a buyer's market, a consumer's market for electric tech. As hardware prices keep falling, the already strong consumer case is for clean power and electric transport just keeps strengthening. Next. Another very important dynamic for the global conversation is China has emerged not just the principal manufacturer in the energy transition, but also the principal innovator. Today, it's fair to describe China just as much the science laboratory of the energy transition as its factory. And here we show annual all clean energy patents over time. And we see in 2000, China was responsible for about 5% of global all clean energy patents filed. Today, that's around 75%. In specific areas, it's even higher. In solar and wind, and that's 90%. In energy storage, that's 85%. In electric vehicles, it's 70%. And if we look at the corporate R&D in the China's energy sector spends, and it's equal to the US and the EU combined. And in practical terms, this means EVs with longer range and faster charging, in more efficient solar panels that use fewer materials and take up less space, batteries dense enough to enter big trucks and small planes. And from a global perspective, these technology improvements spill over borders as they are relevant to all open markets that are looking to embrace superior technology. And so if we combine these factors, that is the falling costs, the massive supply side capacity, and the relentless innovation, then the conclusion is that the incentives for emerging markets to adopt electrotech point in one direction. And when incentives line up, markets move fast. Next. And so we see Chinese-made solar panels, or batteries, electric vehicles are rushing into the fast-growing global south. Here we show solar panel exports by destination. And we see today just as many solar panels will arrive in non-OECD countries as OECD countries. So we're witnessing the beginning of the solar revolution in the world Sunbelt, home to 80% of the global population. And Africa is a particularly notable case. Africa has about 40% of global solar and wind potential. And at sub 10 cents per watt modules, this is meaningfully changing in the prospects of gaining access to electricity. And so to put these kind of module prices into context, about $20 of solar modules could double the electricity consumption of the average person in sub-Saharan Africa. And now, of course, there's many other costs. You've got wires, you've got inverters, you've got soft costs. But when the cost of the core component is as cheap as it is many more things, many new possibilities open up. And the proof is really in the adoption. Next. As a separate Ember study just showed, 25 African countries imported at least 100 megawatts of solar panels in the last year. And across emerging markets more broadly, as we show in the left, countries from Brazil to Namibia, from Kenya to Chile, are deploying solar and wind faster than the United States. And if we just look at solar, where the kind of the leapfrog dynamic is stronger, 63% of emerging markets, it's by electricity demand, has leapfrogged the United States as of 2023. And then on the right-hand side, we see the same pattern is emerging with electrification, especially in Southeast Asia, where Vietnam, Bangladesh, Malaysia, Indonesia, many countries have overtaken the US in economy-wide electrification. And so the parallel is just as electricity networks rippled outwards from the geographical leaders in the early 20th century, from Berlin, New York, electricity-first industrialization is rippling outwards from East China to Southeast Asia. Third and finally, so the final question this chapter picks up is, what does this mean for global fossil fuel demand? And for that, we can divide the world into 3 buckets. The first is the OECD, shown in dark grey in the graph above, where fossil fuel demand peaked a generation ago and has been falling steadily since. The second grouping is non-OECD ex-China, where we've been relatively steady growth in fossil fuel demand. But an important dynamic that's emerged since 2018 is the declines in the OECD offsetting in the growth in non-OECD ex-China. And so to say that in different words, if we take China out of the global energy system, fossil fuel demand has been on a plateau for about 6 years. And the third line is China. And in this 3-part framing, if non-OECD and OECD are bundled, China has been responsible for all the net growth. And as we've seen from chapter 1 and chapter 2, we're now just at that historic turning point where fossil fuel growth in the world's largest energy consumer is plateauing. And so here we take future scenarios from the IEA's stated policies, is where that decline and begins before 2030. And given again, and from observations in Chapter 1 and 2, China's track record of hitting these targets early, this is reasonably likely to prove conservative. And so the bottom line from a global perspective is, as China moves from growth to decline, global fossil fuel demand and shifts from a bumpy plateau to structural decline. And with fossil fuels in decline, and I would suggest the electrotech future will be obvious to all. Thank you.
Lovely. Thank you so much to Sam, to Bi-Ching, and for Ewan to taking us through the report. Now, our Q&A box is open for your questions and comments. So if you have any at any stage, please put them in the box and we will deal with them in the final third of this webinar. Now we're moving on to our panel discussion, and it's my pleasure to introduce the guests that we have for you today. Ramon Mendez is a former Energy Secretary of Uruguay, now president of REN21, the global network of stakeholders involved in the clean energy transition. It's lovely to have you with us, Ramon. Bernice Lee from Chatham House in London is one of Europe's leading experts on the clean energy transition and climate change policy in China and the links between China and the rest of the world. She currently heads up the Futures programme at Chatham House. Sonia Dunlop is CEO of the Global Solar Council, which represents much of the world's solar technology industry. Now, for our fourth panelist, if you'd seen the flyer, you probably would have been expecting to see Professor Dan Kamen joining us. Dan is a former US White House energy advisor. He sent his apologies at the very last minute, but he had one of the best reasons that I can ever think of in this context, which is that he actually is in China talking about clean energy with various Chinese officials and got called away to an extremely important meeting. So that's not a bad reason when you think about it. For those of you who follow sports, you will know that many sports teams have a super sub who can be pulled into the action at the last minute whenever this sort of things happen. And so I'm delighted to say that Ember's super sub, Dave Jones, our chief analyst, has also joined us for this panel. So thanks, Dave. Let me come first of all to you, Sonia, if I may. Of all that we've presented, what is it that excites you the most about China's clean energy transition?
Thanks so much, Richard, and thanks to Ember for this fantastic analysis. I mean, for us at the Global Solar Council, and we are the Global Solar PV Industry Association, but increasingly also the Global Battery Storage Industry Association, what really excites us is how the huge rollout of solar and battery storage, and everything you said there in terms of supply and demand is absolutely right. But what it actually means is that for households, and we think of 25 to 50 million of them already, are able to put solar on the roof of their home or businesses on the roof of their building and lower their electricity bills month by month and kind of gain that energy dependence and that resilience to all kinds of external shocks. And I think, it's that kind of very tangible impact in terms of energy access, in terms of energy resilience, and in terms of actual impact on real households that really is exciting. But I think another thing that's really striking about this actually is that if you look at those numbers that Sam and Bi-Ching just presented, it means that the top 4 Chinese solar companies, many of them also expanding into battery storage, are now making more energy, if you think about the total sort of energy production of their product over its lifetime, than the top 4 oil and gas companies. And the funny thing is, everyone's heard of the oil and gas companies, but not many have heard of the solar companies in terms of the general public. And that's a really strange shift in terms of where our energy is coming from in the world.
Yes, thank you. Just one follow-up on that. For now, clearly China does hold the lead in manufacturing and exports across most of the clean energy industry. Is that basically good news, or do you have any concerns about the concentration of the supply and supply chains and so on?
CEO of the Global Solar Council is essentially to bring together both the manufacturers and the project developers across solar and all the sort of ancillary technologies such as battery storage from across the world. So my job is to bring together the manufacturers in China with those in Southeast Asia, those in Europe, America, those building factories in Hungary and Saudi Arabia, and so on and so forth. The way we see it, we need to be working towards a really resilient supply chain for the next, years and decades to come. That is, of course, going to be centered on China as the central hub for global manufacturing of every part of the supply chain, right? That's all the way from polysilicon to ingots, wafers, cells, and the final solar panels, and the same value chain for battery storage. But yes, we're going to have to make sure that that resilience is also delivered by some form of planned and strategic sort of a small amount of diversification, and that is why we are in the process of putting together a long-term supply chain strategy for the global solar PV and battery storage supply chains, so that there is a strategy that everyone can buy into for the next 25 plus years in terms of where we are going in the supply chain, to make sure we have maximum resilience, delivering the lowest possible cost in the most sustainable way with the highest ESG standards, and with the necessary parts of the supply chain in the different parts of the world.
Great, thank you very much. Ramon, let me turn to you. So what do you think the implications are for China's dramatic progress and its development of increasingly cheap, clean energy manufactured goods? What do you think the implications are for a region such as Latin America?
Well, thank you so much, Richard. It's a big honor to be with you today. So let me start saying that how much I appreciated the report that you made. It's not only rich in data, but also in clarity of analysis. Too often we see studies overloaded with numbers, but lacking the narrative that help us truly understand what's happening. This one is different because it connects the dots. It gives context, and it really helps us grasp the magnitude of the changes underway in China in the transition. So congratulations to Ember for producing such a powerful piece of work. If we want to understand the scale and speed of what's happening in China in the energy sector, we have to go back to the beginning of this century. At that time, one of China's biggest priority was electrification, bringing reliable electricity not just to the booming coastal cities, but to towns and villages across the country. This was about much more than powering factories. It was about giving hundreds of millions of people better living conditions, light for studying at night, clean cooking, refrigeration of food, heating and cooling in extreme weather. In other words, electricity was not only the foundation for China's economic growth, but also for a dramatic improvements in the daily lives of ordinary people. This massive expansion of access led the groundwork for everything that followed. Once you have a national grid and near universal electrification, the stage is set for the next transformation, the shift to clean energy. And that's exactly what China turned its attention. So what are the main features of this transition? First, the scale. China doesn't do things in small doses. When they build solar, they build it by gigawatts. We're talking about solar farms so vast they can cover entire deserts, and offshore wind projects that rival anything in Europe. Second, the pace. In less than 2 decades, China has gone from being almost completely dependent on coal to being the largest investor in renewable energy worldwide. No other country has rolled out solar panels and wind turbines at this pace. Third, the industrial strategy behind it. China didn't just install renewables at home. They made a decision to dominate global supply chains, solar panels, wind turbines, batteries, EVs. In each of these sectors, China firms are now world leaders. And it didn't happen by chance. This was the result of industrial policy, subsidies, research support, and clear targets in success 5-year plans. This strategy was, let's clean up our system, create jobs, and at the same time become exporters of technology for the future. Fourth, the infrastructure to make it all works. China knows that it's not enough to build renewables. You have to move the power from where it is produced to where it is consumed. That's why they invested massively in ultra-high voltage transition lines, carrying energy from the windy, sunny west to the big cities at the east. they've also begun experimenting with large-scale storage, demand management, and smart grids. They aren't side projects. They were core parts of the transition. And fifth and last, and maybe the most important, the balancing act. Coal hasn't disappeared. In fact, some provinces continue to rely heavily on it, both for jobs and for local energy security. The government faces the constant challenge of balancing short-term needs with long-term goals. But if we step back, the trend is clear. Renewables are growing fast, with coal's dominance in shrinking, even if slowly. Now, let me highlight something from Ember report that really caught my attention: patents. 5 years ago, China accounted for only 5% of global patents in renewables. Today, the share is around 75. Think about it. In just half a decade, they went from being a marginal player in innovation to being the world's dominant source of new ideas and technologies in the renewable fields. That tells us something fundamental. China is not only scaling up renewable at home, but also shaping the global knowledge frontier. And yet, just to finish, if I have to pick one feature that truly defines China energy transition has common with the rest of the world, in particular Latin America, this is planning. We often imagine that markets alone will deliver the transition, but China, planning has been the backbone. Every 5 years, the government sets up a new plan with precise targets on how much capacity and each technology will be added, how the energy mix will evolve, and where investments should go. These aren't vague statements of intent. They are binding guidelines that shape policies, subsidies, and even land use. Why does this matter? Because the energy transition are disruptive by definition. They involve huge shifts in technology, economic, society, and in geopolitics. You can improvise them year by year. You need a long-term vision, and you need to integrate multiple perspectives: the technical, the economic, the environmental, and the geopolitical. That's what planning does. China has shown that with strong planning, you can move mountains, sometimes literally when it comes to reshaping landscape for solar and projects and hydro projects. Of course, the system is not perfect. There are contradictions, there are delays, there are political tension. But the key lesson here is, without a binding long-term plan, the energy transition may remain a slogan. With one, it becomes a process of real transformation. What is important to underline is that this type of long-term energy planning and continuity of policy is not something that can only happen in China, with its unique size, economy, and particular political system. A very similar story took place in a country what could hardly be more different: my country, Uruguay. As you know, Uruguay has gone through an energy revolution. Today, Uruguay primary energy mix has more than 65% renewable sources, and in the power sector, 99%, with a combination of hydro, wind, solar, and biomass waste. This allows us to halve the production electricity cost, but we had also other tremendous positive economic and social impacts, as we received $6 billion investment, 12% of the country's GDP, and created 50,000 new jobs, 3% of the total labor force of the country. Uruguay's success was built on a broad multi-party agreement that transcends government and election cycles. This allows us to design a binding and systemic electricity planning model. This approach identified the optimal combination of technology for cost, reliability, and sustainability, and allows us to define the regulatory, industrial, and capacity building necessary for the transition to take place. And we anchor that vision through transparent, competitive auctions and long-term contracts. The stability of this framework gave a private international investment the confidence to commit billions of dollars, with society at large reaped the benefits of lower cost, job creation, and almost universal access to clean energy. So this is what I wanted to share with you. To close, just that there's one takeaway from China's story to be learned from the rest of the world, particularly for the global south, which is planning. Planning matters. It matters not just for China, but to navigate the whole transition all over the world.
Thanks so much, Ramon. Lovely. And yeah, one of the things that struck me in Sam's graph about the countries that have sort of moved ahead of the US in wind and solar was that some of those are in Latin America, countries that already have a lot of hydro, so not resting on their laurels, but getting involved. Okay, Dave, let me come to you now. Some of the work that you've been doing over the last year has been looking at where the Chinese exports, particularly of solar panels, are ending up and the impact that it's having on the electricity systems of the countries that are importing them. So what are your top takeaways from that research you've been doing?
Yeah, obviously there's three technologies that we've been talking about that are so critical to China's strategy, which is solar, batteries, EVs. And we've done a lot of work on that solar build out, and we're now starting to track what's happening with some of those batteries. We've been doing a lot of research coming into that, and I guess one of the most surprising things when you study all of this is we've talked about a lot of the prices, the quantities already, and Ramon and Sam alluded to some of like the innovation that's going on as well. But I guess in part, and replying to one of the questions in there around the focus on patent numbers, I just wanted to mention a couple of things on the ground that we've seen through the research about how that, specifically in the last 12 months, there's been such a change in the quality of that product that's coming out as well, that's helping to fuel the next kind of momentum of that electric tech revolution that we've been seeing build up. On the battery side, that innovation has really come around how the containerized grid batteries are being built up. They're almost plug and play now. They don't need the level of engineering and installation that they needed before. The physical footprint is so much smaller, so you don't just need that space from before. They've got 20-year warranties on some of them now, where the quality of the cells and the casing gives it so much protection, and that they're able to last longer than anyone was putting into their financial modules before. On the EV side, the innovation is so many firsts. You've seen like two manufacturers now come out with megawatt charging. Probably the biggest changes have been around the chemistry of the battery. Again, 80% of electric vehicle batteries this year in China were LFP technology, so 80% without nickel or cobalt at all. The US and EU are nowhere close to that proportion, that still rely on those critical minerals. And now with sodium ion building up as another source for battery technology, you're taking the last critical mineral, lithium, out of the mix as well. And all of that's opening up the market further towards trucks. No one thought that the electric trucks were going to be so big so quickly. And the other bit of innovation around that is the build-up of energy density, which obviously now is so important for aviation, which could well be next. On the solar side, it's quite interesting because there's cutthroat competition. You would think that innovation wouldn't be a thing, and every month there's another manufacturer coming out setting another efficiency record as they get closer and closer to that physical the physics boundary that you can actually achieve of efficiency from a silicon panel. And as that innovation has come through, it's just changed the whole of the cost curve that they're able to be able to create at. And that's created demand which wouldn't have existed at a higher price point. So EVs now so close to combustion engine prices on CapEx alone, obviously with much cheaper fuel costs. On the grid batteries, so cheap that you can now see them being paired so much that in some places you're getting 24-hour electricity. And then solar panels down at $60, which is completely opening up the market for the affordability of them. And when you look at the boom, for example, in Pakistan and what's driving that, there's no big finance model that's going on. People at $60, so most people can have 4-day solar panel for their roof to be able to put onto their roof in the first place. And on the work that we did around the build out of Africa, solar in Africa, which is a really kind of exciting point of takeoff at the moment. It's still relatively small, but across so many countries, it's now reaching that point of significance, which is really exciting. One of the first questions is always about solar manufacturing. Is like why importing? Why are you not making those within the country? And obviously some countries are, in Morocco and South Africa, and increasingly in Egypt there's some factories coming online. But really at $60 for a solar panel, the value it adds to a country, whether in diesel replacement because you're not having to use a diesel generator, which is common, or just the electricity maybe that you wouldn't be able to have otherwise. The value add from this technology is absolutely massive, and I think that's really started to dawn on some countries. For example, Nigeria at the start of the year went to put a block onto solar panel imports, and then it took them less than a month to realize the value that was coming from them, for them to step back and change their decision from that. Two countries worth specifically mentioning, getting around to your question, Richard, which was outside of Africa, which are Saudi Arabia and Australia, who have been building up solar for the in Saudi Arabia's case, less than 2 years really. In Australia's a lot longer, but both really stepping up massively on battery technology now, where you can see the two working together, that are gonna really transform the grids away from fossil fuels before, in a really secure way. But really nowhere else is all of this electrotech more apparent than in China in itself. So in the first 6 months of this year, 2/3 of solar panels installed worldwide were installed within China, and that's pretty amazing. Thank you.
Great, thanks so much, Dave. If any of you haven't seen Dave's report on solar in Africa that came out about a month ago, I'd thoroughly recommend it. It's the most interesting read. Let me turn now to Bernice Lee. Bernice, you've been studying obviously China for a very long time on this arena. One of the things that comes out of our report is we asked this question of, is China in it for the long haul? Like, is the clean energy transition in China going to continue? Is it going to accelerate? Or are there factors that could slow it down? And I think we come down, based on the experts that we spoke to for the report, on the side that it's pretty much likely to continue. Have we got that right, do you think?
Well, thank you very much, Richard, and thank you very much, everybody else. I feel very, very much out-geeked by everybody here, so I'm not going to try and pretend that I know anything about numbers anymore. But the reality is that when we talk about China today and clean energy, we're not talking about if anymore, are we? We're really talking about how far, how much, and how deep. The problem is that obviously life isn't just about numbers and science. Life is also about politics and power and the tug of war really between the old and the new and the incumbents and obviously new systems. This is why it is important to look not just at numbers, which you did a great job helping us, but also look at some of the political signals as well. Just last week in the Shanghai Cooperation Organization Summit, the president of China announced new platforms on energy and green industry. Is talking about 10 gigawatt of solar and wind across these countries the next 5 years. Is not a huge number, but what it signals is that it is seen to be an engine of discussion and growth and international cooperation, when this forum historically is much more about fossil fuel collaboration. And don't get me wrong, there was also a discussion about the announcement about pipeline in addition to clean energy at the same time. But at the same time, bearing in mind that we are looking at this tug of war between the new and the old, and also the clean and the definitely not very clean, and at best maybe the green and the sludgy green and the green and the brown. What is important is to ask ourselves what these developments that you've highlighted so eloquently here by everybody in this amazingly impressive piece of work is the fact that it is here for the long haul, not least because there's a lot of investment in it already, and the sunk cost is also part of the reason. The path dependency is being shifted as we speak. So we often talk about the new and the old, as in the old is coal, the new is green energy. We're now looking at the path dependency slightly shifting, and again, I think Yiqing already described how obviously it is changing the role of coal, even though coal is in the system, but it's now a different use of coal compared to what it was before. So bearing in mind this is a moving picture, it is important therefore for us to focus really on what it means for the rest of the world. Again, you guys have really highlighted already the three things that is really important. One, of course, is the question of price. It is importantly pointed out how much China has contributed to price reduction, and whether or not this will continue or not depends on whether or not these businesses become viable, and there's no reason for them not to be fixed in the medium term. Secondly, the important thing about for the rest of the world is how that is really changing politics and the geopolitics as well. And on this, as with many other issues, there are different dimensions around it. We hear a lot about Chinese domination over critical minerals and mining and processing. And in different parts of the world, we're also seeing that China's trajectory and its determination in this area is also creating different types of reactions in different parts of the world. So in Germany and the US, I think there's a survey by Pew and Bertelsmann Foundation talking about more support for restricting Chinese clean tech imports as well. And obviously, if is unaddressed and we don't focus on cooperation, these could slow transition as well. But more importantly, this revolution in China has enormous implication for what you call developing countries or global south or developing country regions, not least because many countries are already positioning themselves not just to import as major importers, but also are there to capture the value addition. So this brings me to this. I think one of the most important questions for the clean energy transition, the longer term. China has clearly demonstrated through all the numbers that you've used that it is actually an important part of its energy system and a part of its growth model and a part of its international engagement tool as well. It is about energy security, national security, and economic security and international standing. But at the same time, the question of how the world, many countries, including China, choose to help grow the global green pie, as I like to call it, is going to be key to the long-term future of obviously not just energy and climate security, but also this revolution, energy transition. If other countries, especially those in the global south or developing country regions, feel that they're confined to low value addition, environmentally damaged roles, just provider of basic resources, there will be larger resistance, not just in what we saw already in the global west, so to speak, but also in different parts of the world. This means that it is very important that China and other countries, and especially those in the global north and global west, are going to support more transparent supply chains, more affordable finance, and genuine capacity building so that there is long-term trust and access for different parts of the world for clean energy as well. So for the rest of the world as well, there leaves every other country in the world as well a decision about whether to see China's green ascendancy as a threat to hedge against or as a foundation for different types of partnerships. I think the reality is that we need to do both. Some countries will see this as a threat, but at the same time, it doesn't mean that cooperation is not needed if we're to grow the green pie together and how we create this interdependent, inclusive global green economy is going to depend on every country's reaction and building on this. In some ways, green energy advantage, competitive advantage that China's growth and investment has helped the world create. Maybe the last thing I was going to say is I love that my favorite word is mentioned, the word patent. I spent a lot of my younger lives as a young researcher counting patents, and in the olden days when you can't really count on machines to count them, we did them by hand for years. I think one thing China's green revolution and investment has taught us is that innovation isn't just about what you do in a lab, it is also about doing. The fact that China investing in the doing and the production and investing in fast is creating the condition for more innovation. So I think that this is sort of what I want to leave with really, which is there are many choices that we need to make from here on to capitalize on this great advantage that indeed China's scale has helped create for the world. At the same time, countries have a choice to make in terms of how we co-create this interdependent ecosystem, inclusive ecosystem, where we can actually scale these technologies further in different parts of the world. And it will be about how to make sure that everyone share that green pie that we have a great start from. Thank you very much, everybody.
Thanks very much, Bernice, and I'm definitely going to take that phrase "global green pie" as entering the lexicon now. And actually, let me just come to you, Ramon, just on that point, because you were talking earlier about the fact that in China, one of the most significant factors about the transition is planning, and that's something that other developing countries need as well. When you see what's happening, for example, in Latin America, are you seeing these other, what you might call soft skills coming from China as well as the solar panels? Are you seeing the investment in supply chains and things like this, which will actually cement this revolution in other parts of the global south, as Bernice was talking about?
No, in fact, to be honest, no. I'm not seeing at all in Latin America right now to have this long-term planning in order to make it possible. I mean, we are stopped. We are very happy of having a lot of hydro, but we are still very dependent on fossil fuels. And the transition pace in Latin America is going very, very slow, to be honest. I mean, if we just consider wind and solar, we are not advanced at the expected pace. And this is really incredible because in Latin America, as you said, we have hydro. So hydro is perfect in order to filter variability of wind and solar variability. And on top of that, I mean, we have tremendous both wind and solar potentials. And so this will really decrease cost. It's just, even if climate change didn't exist, in Latin America, wind and solar decrease cost of the energy system. So I think this has to be, as many of us has already told, this has to do with policies. We need much more strong policies, and the narrative is crucial in order to create binding politics in order to make it possible.
Great, thanks very much, Salman. Now, as you will have seen, some comments and questions are coming into the Q&A box. Please keep them coming in. We've got just under half an hour left, and we're going to do our best to address all of the ones that you put in there. So as you see, Sam, Biqing and Ewan have stayed with us as well. So if you have any questions that are particularly relevant to the numbers that they put forward, or any questions about the analysis, then this is the best time to ask them as well. Let me dive into the Q&A box as it is. And here's one for you, Sonia. I think a very, very simple question from Tim Harris. Are solar companies making any money?
Well, the answer is not much, and it's a damn good question. So indeed, even though the solar industry is growing exponentially and deployment is growing exponentially, all is not well in terms of manufacturing. So all the major manufacturers are in a really financially precarious position. Some of them may be making losses, some of them are barely making a profit. We're in a situation of pollution, right? Of excessive, very intense competition, which is essentially leading to a price war inside China and outside China, with different manufacturers constantly undercutting each other for market share. The thing that is allowing these companies to stay afloat is essentially constantly growing volumes, right? So the constant growth in the volumes that they are selling. And of course, and this is where it gets very complex, but different economic models around the world, support from their often local, regional governments as well. There is no doubt that, of course, if you look at the input costs of manufacturing solar, in terms of land, in terms of power, in terms of labor, although that's a very small percentage, and input costs, China obviously is the cheapest place to make it. But no, all is not well. We are in a situation of overcapacity. Roughly 700 gigawatts deployed this year, 1.2, 1.5 terawatts of manufacturing capacity around the world. It is possible that some of that will close, which from a climate change perspective is completely ludicrous in a way, but from a kind of a pure business perspective in terms of balancing supply and demand within solar PV, would make some sense. And I think the key thing for governments around the world geopolitically to bear in mind when they're thinking about what their strategy is in terms of their role to play in the energy transition is indeed that when you're looking at if ultimately one of your goals is to increase job creation in a country, and I was talking to the Kenyan government just the other day, who are really keen to create more jobs in general in the country. The way to create jobs from the energy transition is actually to deploy distributed renewables such as solar and battery storage, and not necessarily to make it. There are very few jobs in manufacturing and in factories. Of course, there's a huge amount of value of that, and also sort of geostrategic value, but that in terms of jobs, all the jobs are in deployment and getting up onto roofs and hammering those panels onto roofs, and in getting them out and hammering onto the racking in solar farms as well. And that's important for governments to bear in mind as they think about their overall energy strategies. But there is a crisis in the global solar manufacturing industry. There is a crisis in the Chinese solar manufacturing industry. This has to be fixed with consolidation, with some kind of a push towards consolidation, and perhaps some of the more outdated factories being closed, and is essentially a symptom of the relentless innovation and constant changes in manufacturing technologies, as well as the really intense competition that we've seen between the different manufacturers. Back to you, Richard.
Thanks so much, Sonia. Yeah, let me pick up on one of the other questions, which is in the box, which is, I think is probably, I should turn to Sam for a first go at this one. So the question is about patents, and the question is about the quality of patents. And the question is, Sam, as you'll be able to see, is there an ongoing debate about the quality of patents, with some sources suggesting that many of China's patents are low quality? What could you say about that?
Yes, and there is some debate takes place about this quality issue, but very little debate takes place about the broad trend and conclusion that China now leads its patents. And to adjust for quality gets into quite murky qualitative area. And from my perspective, proxy patents is ultimately about a proxy for technological innovation, and for which the proof is in the technology. And if we look across the core electrotech areas, it's Chinese firms that are principally raising the ceiling of battery densities. It's Chinese firms that are raising the ceiling of solar panel efficiencies. It's Chinese firms that are beginning to put batteries into ships and short haul flights. Right, so whilst that is a debate, I see very little debate about the conclusion of where the centre of technological excellence lies in electrotech.
Bernice, perhaps we can draw on your background as a student of patents. What would you say about this?
Well, let me start by agreeing with Sam. I think that this quality issue is a sort of interesting and tricky one because ultimately we used to think of patents as a sort of indicator of innovation, but actually what is needed is deployment. What I was trying to say earlier is that deployment, it seems to me, is driving innovation. And the example that Sam just gave is a good example of that you can file patents. And then again, I mean, patents. There are different ways to count them, and I encourage people who want to do more work on this. Nowadays, we've got obviously machines and algorithms doing a lot of the work. It's going to be easier to figure out because obviously it's about where they're filed, whether they're filed in multiple jurisdictions. Therefore, that means that the quality would tend to be higher because they are closer to market, etc., etc. So I think there are many different ways to geek out about this. But at the same time, the more important point, though, is that in the end, whether or not they go to market fast enough nowadays seems to me to be an indicator of whether or not there's long-term longevity. So if that's the criteria, then I think that we should start watching those as well. And the use case that Sam outlined just now is indeed a good indicator of whether or not they are going to be useful or not. So, I mean, I don't want to make a judgment on quality. It's obviously technology dependent, and there are teams and teams of experts in each of the patent office determining the quality in different parts of the world. So I'm going to venture to suggest that the more places they are filed, the more they believe that there are market opportunities in different parts of the world because you file in multiple jurisdictions when you think that you can export. And now that the world trade landscape has changed, I don't even know whether or not that is still a good indicator or not for the future. So I think these are some of the questions that I have really.
Thanks, Bernice, and thanks especially for raising that point about innovation. About deployment driving innovation. I think that's something that a lot of people don't quite understand, and there are books written about the nature of innovation that don't discuss the role, particularly of the state in the early days, in actually stimulating deployment to get that innovation. My mind was also drawn to a quote I saw in a newspaper article in the last couple of days from a British official who was talking about cooperation with the US, and the quote was something about we must preserve our position as the innovators. And I was thinking, I better send them a copy of the China Energy Transition Review when it's out. Anyway, let me turn to another question that is in the box, and Bi-Ching, maybe this is one for you to have a look at, and it's the question is about the new contracts for difference scheme that's now come into place in June. Do you think it's going to make any real difference to the speed of rollout? What does it actually mean?
Thanks, Richard. Maybe quickly, we have seen, as we mentioned in the presentation earlier, that the deployment of wind and solar for the first half of 2025 has been breaking records. China's wind and solar capacity combined has surpassed its thermal capacity. And as Dave mentioned, 2/3 of the global solar installs in the first half of this year has been in China. And all of this is linked to this policy change in some degree. And what we have observed before June, for example, in the month of May, solar install capacity has increased year on year by almost 400%. And right after the implementation date in June, and then following by that in July, we have been seeing a negative growth indeed. But we'll still need to see the numbers for August and for the longer term. But what I would say is that this is an inevitable fluctuation of the market, and it's the market's response to policy change. And if we look at the longer term, the manufacturing capacity is there, and as we discussed today, the trend of the transition is also there. So we, with the discussion with Chinese solar companies, the industry remain relatively positive for the second half of this year in terms of installed capacity. And the China PV Association just recently actually increased its annual prediction for the final install capacity of this year. And then in terms of contract for difference, or in general, the participation of renewables into the power market, it is necessary on one hand to really accommodate variable renewables into the system. It's of course a much bigger question, but then just very quickly, it is a necessary step to better reflect supply and demand. And for China also, it is important to be able to facilitate interprovincial trade to address local level imbalance in terms of resource and economic activities.
Thanks very much, Bi-Ching. Let's stick with developments in China, policy developments, and we have a question from Belinda Shaper, which Dave, I think is a good one for you to look at. What will we be looking out for in China's upcoming 15th five-year plan and NDC for the future of the energy transition, in particular signals on the development of the coal power sector, because as we've suggested, the role of coal is changing from base load to flexibility. So what sort of things would you expect to see or hope to see that would really that would work to cement that aspect of the transition?
Yeah, I can kick us off. I'm sure there's other people on the panel that might have more to add, but there's a couple of things to say. Firstly, I think everyone's got all eyes on their NDC coming out. It's really going to determine how we go into COP30, and the extent to which a positive story from China, that whole positive momentum from China, can actually weigh against the US, the negativeness coming from the US on the clean transition. So that will be really interesting to see how those two outcompete, and the more ambitious that NDC is and more detailed, I think the more there is to talk about and get excited about, and drown out some of the US fossil dominance story. In terms of what comes through, I think the first thing is just how much ambition is there to continue with the wind and solar growth they've been on. They're obviously hitting a point now where curtailment is starting to edge up again, and they're getting because they've just installed so much in the last couple of years. So that will be the first thing. But alongside that, and this is probably where Belinda's getting to, is it feels like at the moment there's concerns that China's coal fleet is almost in two halves. You've got part of it that's being made flexible to be able to cope with shaping around wind and solar, but then there's also a part which is just kind of being left to base load as a separate tranche. And I think that what will need to happen is all of that will need to play a role to be able to enable that wind and solar to carry on being rolled out at a low cost. And ultimately, now we're getting to a point of peak coal within China. No one's really mentioned about shutting the old. Everyone was like, you build new and keep the old there. And now we get to that point of peaking, there will be that question of all of these subcritical power plants, of which everyone thinks of the Chinese coal power plants as being extraordinarily efficient, and so many of them are. A huge portion are, probably a higher proportion than anywhere else in the world, but there's still a huge amount that are subcritical, relatively inefficient underneath all of that aging. What's the plan for closure with all of those, and how does that play out? So they're the things, I guess, that are on my mind from that. Thank you.
Thanks, Dave. I'm just going to throw that same question open to the rest of the panel, see if any other of our panelists and speakers want to address that question. If not, let's move on to another question, and this is a big one actually, and it came up in the launch webinar that we had earlier in the day also, which was aimed more at the Asia time zone. And this is about the logical response of other governments, particularly on the manufacturing side. And the question has come in, can Europe or the US still compete with China in the clean tech space, as the European Commission hopes for, or is it too late and is Europe too far behind in the big three technologies? Or are there other opportunities for non-Chinese firms? Bernice, over to you for this one.
Well, so this is the question of the premise, isn't it? I think that right now we're not really talking about competition yet, are we? We're talking about, can we work together and thereby co-create the next generation of competitive industries again, or compete in the next generation? Because right now it is pretty clear that China has a pretty strong advantage in some of these industries we're talking about. But at the same time, obviously, even though politicians talk tough, as if geopolitics is a law of physics, but oftentimes in a real economy, there are many more collaboration, many more investments, many more stuff happening than what the politicians would like us to believe. So the question then becomes whether or not it is possible to think through. There are areas where, obviously buying stuff from each other to start with, and then finding ways to basically deploy systems, whether separately together or separately together, will become part of the next generation of innovation and deployment that we need. All of this sounds pretty abstract, and then until you think about things that we know we probably will need, but we haven't quite got that yet, and that would include everything from green hydrogen to different generations of capture and storage technologies, among others, in addition to new different types of use for renewables and different types of energy as well. So I think that if the future now looks like it's going to be all of the above, but cleaner and clean, hopefully. So there are obviously clear opportunities for US as well as Europe to be investing more, and therefore down the line, either working together with, co-creating this interdependent system of green development, or competing with in different sectors. And, I just wrote an article with a colleague in, Emmanuel Garan on EU-China, where we were talking about whether or not there are opportunities for Europe to also take a leaf out of China, which was to look at models of joint ventures and also, I don't know whether mandatory is the word, but certainly, required technology transfer, technology sharing in such a way that will also lead to different types of collaborative and competitive models. So I think competition within a collaborative model or collaboration within a competitive model are both options that both US and EU still have with respect to next generation of technology, the next iteration of the technologies. So I definitely don't think that not all is won and not all is lost, depending on your perspective. Thank you.
Thanks, Bernice. Just before I throw that question over to Sonia, I'd just like to remark on the fact that we've got about 9 minutes left of this webinar. So if you have any more questions, any more observations that you'd like the panel or the Ember authors to discuss, then get them in now. Let me go to Sonia first, Ramon, then I will come to you as well. Sonia.
Yes, I mean, look, it's a really good question. Are there parts of the supply chain that Europe or the US or other parts of the world could focus on? I think actually inverter manufacturing. So inverters are obviously the brain of a solar system and of a battery storage system. More and more being called upon to be smart inverters, grid forming inverters that can provide services to the grid, much more sort of distributed supply chain around the world. That kind of part of the supply chain where increasingly more of the value will be as the cost of the actual solar panels and battery cells reduces is going to be really important. And we're going to be doing publishing a report in New York at the end of the month exactly about how critical that is. I do also think, a lot of countries such as Brazil, such as Saudi Arabia and others have essentially taken the strategy, well, we want to see some factories for solar, for storage, for other clean energy technologies. I'm vice chair of the Global Renewables Alliance as well. So we welcome Chinese companies to come and partner with our own national actors to come and set up factories on our soil. Because I think the person who's asking the question is clearly coming from a European perspective. Don't forget that every single leading developer of utility scale solar and battery storage and wind around the world is essentially a European company, right? So if you look at the world outside of China, you're talking Total Energy, you're talking Lightsource BP, you're talking Engie, EDF, Enel, EDP. These are all the big European utilities that are developing big projects all over the world outside of China. And so do not think for a second that there is no benefit back to Europe Incorporated or UK, Europe PLC from the global renewables boom. All of the financial services, all of the legal services, all of the capital for the global solar boom outside of China is all coming from Europe, from London and Milan mostly. And so there is a huge benefit coming back to Europe from this. And so there are definitely other parts of the supply chain to be looking at, as well as, of course, working together on that global strategy for the long-term supply chain, for solar and storage, to make sure that we can get to that overall objective of a low-cost, diversified and resilient supply chain. Back to you, Richard.
Thank you, Sonia, and straight back to you, Ramon, please.
No, just to add that nowadays, what I think is that going to remaining fossil fuels or going to renewables is no longer an option, because now the new renewable-based economy is already in place. I mean, the technology is ready, everything is ready. We're just scaling up in order to decrease and continue decreasing cost. So this is not an option. I mean, we will have to cooperate. And if a given country, let's imagine a given country with a president that has denied this transition and is going to be back to the fossil fuels, this country will simply lose this race for the building of the new economy that is going to be there for the whole 21st century. So, I mean, we need to cooperate. We need to understand that the new economy is ready, and this new economy brings us lower costs, independence and fluctuation of energy commodity prices due to any kind of geopolitical events, producing billions of jobs and creating the appropriate conditions to stop climate change. So this is not an issue. We simply have to understand that this is what is going to happen in the 21st century.
Thanks so much, Ramon. Yep, absolutely. Sam, we've got one question in the box that I think is probably best addressed to you. What are the trends that we've outlined in the report? What do you think they mean for future LNG demand in China and globally?
Okay, good question. I think the LNG market is going to face a painful degree of overcapacity. And I think that for two reasons. One is the competition LNG has never been more profound, and as the cost of solar and increasingly batteries is come down, and the economic case worsens, and the second is from a security criteria, solar and batteries is an owning the kit rather than being reliant on continued fuel and imports is far superior in 2025. And then in that backdrop of fierce competition in LNG and solar, we're seeing a very considerable amount of LNG come online. And so just to put that to put some numbers on that, in a 600 BCM market, the IEA expects nearly 300 BCM to be coming online to 2030. Roughly about half of that's in the US. And for me, there's no case, even in the most conservative scenarios, where demand even closely matches that.
Great, thanks very much. And you'll find more about that in the report as well, although I should perhaps add the caveat that we've concentrated exclusively on energy sector fossil fuel demand rather than the non-energy uses. We've got a final question here, which is a really interesting one from James van Leuven. How are rates of advancement and employment of AI expected to influence rates of advancement and deployment of electrotech? Looking at the time, Sonia, you have 2 minutes maximum, please, to give us your download.
For us at the Global Solar Council, the way that AI could really revolutionize the electro-tech transition is really around facilitating the grid integration of wind, solar, storage, hydro, pumped hydro, long duration storage, geothermal, and so on, because that is where the frontier is, right? It's how do we guarantee the grid services, the services to the transmission system operators, the services to the distribution companies, with a high share of wind and solar and battery storage and so on. How do we guarantee those ancillary services in this new kind of electro-tech transition when we are moving beyond spinning reserve, thermal power generation and so on? And it's AI, I think, that's really going to be able to enable us to do that and get to those high shares of wind and solar. For that, and also enable us to do the of course not just the electrification of demand, but the ability to dial that demand up and down, to manage the demand response across the system and across millions and millions and millions of small scale generators rather than big power plants. And be able to still keep the system in balance, right? And that is where I think AI is going to play such an important role to get us to the ultimate goal, and is sort of a really important partner in the sort of wider electro-tech transition. So I think the opportunities are endless there. I would also say coal being the idea that mentioned earlier of coal being retrofitted to become a source of flexibility. For us, as the Global Renewables Alliance and the Global Solar Council, we would definitely say the best sources of flexibility remain battery storage, long duration storage, pump storage, hydro, and the electrification of demand and time of use prices, and not to mention, of course, more grid interconnectors. But I'm willing to be convinced otherwise, perhaps, if there's new evidence that comes to the fore. Thanks.
Thanks so much. Well, with that, we're about out of time, so it only remains for me to thank our panelists, Sonia Dunlop, Bernice Lee, Ramon Mendez, and Ember's own super sub Dave Jones, as well as the report's authors who've been presenting to you today, Bi-Ching Yang, Sam Butler-Sloss, and Ewan Graham. Another very important author that I should absolutely give a nod to is our coordinating lead author, Mui Yang, and a couple of other very special people. I mean, many Ember staff have played a role in this, but particular thanks to Xiao Zhang, who's kept us on target with a lot of the communications and materials here, and Aditya Lola, who managed the whole project from beginning to an end. Thanks for being with us, and hope you enjoyed it. Hope you enjoyed reading the report as well, and we'll see you in a year's time, hopefully for our second Ember China Energy Transition Review. Bye for now.